Hey everybody, this is just a little quick sound check just to make sure technology is on our side. We'll start in around 2 minutes. Could you please type yes or just a quick hi in the chat box so that way I know that you hear me and therefore I know sound is good. Thank you so much, guys. Okay, everybody, time to begin our session. Hello, everyone. Today is January 4, 2019. My name is Jose Blasco. We're going to spend an hour or so together talking about the markets. Today is it's a trading day. The markets will be opening in 3 minutes from now to plan a few trades so we can execute them in the second part of the session in 30 minutes or so. Okay. Today is a day for long term. So we'll be talking about mainly options, okay, and looking at the markets from a little bit of a longer term perspective. It does very, very, very long term, but we will look at different scenarios and different possibilities. Okay, but anyway, before we start, let's do a little housekeeping, if you wish. So let's begin with the disclaimers. The following videos, clips, demonstrations are for educational and instructional purposes only. Traditive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in this video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Okay, talking about housekeeping, a little more detail about certain things that you need to know, just to make sure we all speak the same language. So what you should be able to see on the screen as we speak is our main website. Copying and pasting the URLs on your screen, so that way if you want to make a note, you can do that easily. So let me do that. Our website is www.tradewithufos.com. And the reason why I am mentioning this is because there is a lot of information in the website that could be very useful and make a big difference on your performance and your proper application of the AutoUFOs app. Okay, so let me very quickly, again, a little bit of housekeeping here. Let me very quickly explain a few things that are key for you to keep in our website. We have the guide section. I always point at the guide. Today will not be an exception. Why? Because you're using a tool, and like all tools, you need to understand the functionality, the options, the settings. So the best way to get proper information about all of this is to go ahead and explore the guide, which the guide is accessible in PDF format. If you click on this link with Translation 9.5, or this other link for TradeStation 10, you get the guide in PDF format. But if reading manuals is not for you, because sometimes, I think we all at times we use tools in our lives without looking at the guide. So to make your life a little easier and still be exposed to how to use the tool, there is a collection of videos right below with legal considerations and what does this app do, ready and to access and use the app, components and settings, and finally calibration. And those are very important and key components for you to understand. So please watch those videos. It would take you, I would say, less than an hour to watch all those videos, or even better, read the guide, and therefore you would be in a better position to use the tool efficiently. Another section of our website that would probably help you greatly to understand the tool more efficiently is the samples or examples section, where if you scroll down, you will get to see examples of trades from our users. Okay, those same examples that you can see on our website can also be accessed if you were to use our TradeStation page, which it would be great if all of you went there and liked our Facebook page. Again, it's not only about just liking the page, or for, if you wish, promotion and marketing of our tools. It's more efficient, which is it's also the case. But it's the reason why I'm mentioning this today is really because all those trade examples that users are going to be posting and that you see on our website are also on the Facebook stream, if you wish, in the list of posts. And the beauty is that if you are subscribed to Facebook, and even, I would say that you have Facebook installed in your mobile device, like your cell phone or mobile phone, now you get those pop-up messages every time we add information, and therefore, in a real-time basis, if you wish, you can keep learning, keep exploring how other users use the tools, and that should help you in your own trading. Okay, so that's why I'm mentioning that. If you are not a fan of Facebook and you are more into professional social media networks like LinkedIn, same thing. Okay, we have a page in LinkedIn. You can go ahead and like it, and therefore you would be informed real time whenever we post something new. So I'm sharing with you the link on the main page, and same story. You just go in there, and all those trade examples will be showing, or any reminder or calendars or anything that we want to share with you. You would get real-time notifications of that, and that would be very useful. Of course, another key tool in this beginning of the session today, where I'm giving you a few reminders. I'm calling it skipping. It's our YouTube channel. For you to be connected. Okay, it's always useful. You see that little bell that you have on the upper right. You can subscribe to our Trade with UFOs YouTube channel, and then you just click on the little bell, and therefore, anytime we are posting a video or doing something that is, you will be notified real time as well. And again, it's all about being connected, and that way we can help you better. Okay. Last one, and we get into TradeStation and we begin to the session. The Trading App Store, with TradeStation. The Trading App Store with TradeStation is a website where that to be able to subscribe to the app. Okay, so I'm just pasting that as well on. You can use those links, and basically when you enter this page and you type AutoUFOs or UFOs, and you click on the green button for search, then the TradeStation App Store will return this link to our AutoUFOs app, and then you can either subscribe for the free trial, which, as the name suggests, is free, or you just subscribe for a long-term use. Charge those $89 a month, like it says in the website. Okay. Anyway, so a little bit of getting organized here, so you know where to find what. And now let's dig into that. I'll tell you one more thing. I almost forgot. Let me go back to our main page. Very important. I think I almost I almost forgot one of the most important ones. On the upper left, we have the Get Together button, which is how we get together. You guys that are attending the session live today, you know of this section because you came here before. But if you haven't seen it or you're watching this recorded, just know that we have the calendar for the month, where we are publishing the following dates. Today, as you can see, January 4 is Friday. Today at 9 a.m. U.S. Eastern Time, we are doing a session which today is for longer term. So today, as I said at the beginning, we're going to be looking into options and things like that and look at longer term positions, okay? The next session will be on Sunday, January 6, and that would be what we call a sharpening session, where that day we're not going to be trading, the market is closed, and therefore we'll use our time together, which will be 10 a.m. U.S. Eastern Time. Of course, if you live in a different time zone, you just need to do the math to find out what time is in your time zone. Because we are traders, so we use New York time as a reference because that's where the most important markets in the world are located at. But if you live in a different time zone in the world, do the math. So you can join us at that time, and we're going to be spending some time together to do sharpening. And by the way, let me tell you more about the subjects for the Sunday so you know what to expect. That way, if you have questions about it, you can send emails, and that way we can be much more specific in the lesson. That way the session will be more useful for you. The subjects for Sunday session will be about trend. We have identified in the world of trading many people that when they think about trend, they think about it the wrong way, or they are confused about what trend is because they have seen 25 different definitions of trend and they don't know how to look at it or they don't know how to think about it. Okay, so one of the subjects that we will discuss on Sunday will be trend, okay, which is a very important subject. Trend, markets that are trending, markets that are not trending, trading in the higher time frames, in the lower time frames, anything you could think of about trend, we'll talk about it. Okay, that's one subject. And the other subject as well, we will go ahead and talk about calibration for the app. Okay, would like to have another session. We have done it before, but you guys to go a little deeper into the calibration process to make sure that your app is ready to be used in a way that is the most ideal based on your preferences, business plan, risk tolerance, etc. Okay, so a very cool session on Sunday. We'll have a great amount of fun and growth. So that way, then we'll jump into January 9, and next week we'll start again back into the markets and planning trades and executing trades. Okay. Very good, wonderful, guys. I see some other messages on the chat box as well. Thanks for that, Orlando. Very kind of you. Orlando said, happy birthday. Yes, you're right, Orlando, you caught me. I'm 1 year older today. So a little more experience in the market, which is always good. A little more gray hair. Not sure if that's so good. But in any case, very kind of you. Thank you so much, Orlando. Anyway, John, nice to see you as well. And all of you guys, Milan, everybody, guys, very nice to see you here. So let's begin our session. Okay, so guys, here we go. We have a TradeStation in front of us. Basic workspace here with TradeStation, nothing magic. We have one chart, and on the left, I have a list of symbols in a radar screen with TradeStation, which I'm not going to use today. Okay, this is kind of like, I mean, these are key markets that you could use every day, any day. But today, because we are doing a session on longer term, and actually we have never discussed together anything. Well, we have, but not in detail. We never discussed much about options. So today I would like to focus on options. And when you think about options, some of you may have traded options before, some of you may have not traded options yet. Well, what you need to know for everybody is that options is a product that has been invented for the purpose of making money. Okay, so that makes it, if you think about what I just said, that's such an important and such a powerful asset. If you think about, I don't know, let's say gold, for example, You could certainly speculate and make money by buying gold and keeping gold at home. But if you make money doing that, you're just being a little lucky. It's just a matter of, being lucky, because for you to buy gold, you have to pay for it. You have to store it. You may be stolen, and then gold has to move your way, and you need to buy at the right time, and you need to sell at the right time, and all of this needs to happen for you to profit, right? And gold was not invented to make money, even though you could make money with gold. Real estate, same story. Houses were not invented to make money. They were invented for people to live in them. But of course, you could buy a house and sell the house and make a profit out of it, as long as you buy it at the right time and you sell it at the right time. But for you to buy it, you had to pay for it, okay? And then you had to maintain it, and you have to buy insurance for the house, and a series of things that make your life difficult, right? But and of course, you could make money with all those products for speculation, right? Where options is a product that has been designed for people to profit, right? Of course, you could be wrong on the trade and lose. I'm not saying that you will make money every time, but that's an instrument that has been created for traders. Okay, so that makes options very relevant, and we'll have fun with options throughout the times. You will hear me say things like options give you options. I really love to play with words, I have to say, and especially English being my first language, so I really love to pay attention to words and play with them. I'm being serious now. I am not playing with the words. Options really are very versatile, and options give us options because we can approach the market in different ways. Okay, so today, what I would like to look for is I would like to look for opportunities to make money in a different, which is not the common way on how most traders make money. Let me explain this better. The way on how most traders makes money is by either buying long or selling short a market, stocks, forex, or futures, and then wait for the market to move their way. And if that was the case, then they would sell or close the trade and then make a profit. This is called directional trading. You got a move. That is how you profit from the move itself. And this is called directional trading, which we love it. And AutoUFOs, it's a great tool precisely to do that. Okay. Now, having said that, not always this is the only way to profit, or not always this is going to be the most efficient way on how to profit, because for you to catch a move and profit from the move, you have to be precise. You need to use a stop. What if you have multiple UFOs? If the car, I'm reading your comment, thanks for that. You got to be precise, you got to use stops. What if you have multiple UFOs on the screen, and as a trader, you were to be undecided on which one to use? Well, in certain market conditions, okay, maybe instead of planning on profiting from catching a move and riding the move, maybe another way to plan on profiting is to do what in options trading is called non-directional trading. A way to say that, it's to profit from time passing, which is a sure thing, by the way, just by having a market remain range bound for a while. For a while means while time passes, and range bound means that the market doesn't move too much either up or down. The market remains in some sort of a range, and you profit from time passing. Okay, so that's another way to think about how to profit. And if you have never seen this before and never done that, different concept. Okay, and I would like to explain a little better this, and we'll certainly use sessions that we will do in the future to get into how options work and how to plan trades for this purpose, etc. Today we're gonna spend like an hour together. So of course I cannot teach you everything you need to know about options and plan the trade and use the UFOs, and it's a little too much for 1 hour. So today is going to be a little bit of a crash course on it. If you have never seen it before, maybe a little too intense, but it's okay. And sometime in the future we'll do proper sessions. When we do shop, we will apply that together again many times. But at least no matter if you have seen it before or you haven't, we'll do it together for the first time today. That way, if you know how options work, you can take advantage of it immediately. And if you don't know how options work and you have never traded options before, at least when we do the sharpening sessions and we learn to do this properly, well, you know what? You have seen it before. So it'll be easier for you to digest and learn and absorb all those concepts, okay? So let me pause, rewind, reset, and restart again. Today, we're going to plan trades that will take multiple days or multiple weeks. Today is a longer term session. But in those multiple days or multiple weeks, I will not be planning trades to catch a move and ride a move. I will be planning trades to make profits as time passes. We're going to have to use options to do that. Options is the only instrument that will allow us to profit as time passes. And the way we're going to do it is we will end up selling options contracts and then allowing time to pass until we reach the expiration date of those options contract. And if you think about it, we're going to kind of like become, by doing that, we kind of become insurance companies. If you wish, the business model would be similar to an insurance company because we're going to be selling options contracts, therefore collecting premium for the contract sold, just like when an insurance company sells you an insurance policy, they get premium for the insurance policy sold, which is a contract. And then the insurance company waits until the expiration date for the contracts to expire, so they keep the premium. And ideally, the driver didn't have an accident, so then they didn't have to do anything and they still keep the premium just because time passed and they reached the expiration date. In our case, we're not dealing with drivers, we're dealing with markets. And to control how good or bad those drivers are, to control the risk, we're going to use the AutoUFOs. So we will be able to assess in the simplest fashion where is the market likely to remain. Another way to say that is where is the market not likely to go, and where the market is not likely to go, that is where we will sell options and let them expire because the market is not likely to go there. So those options are likely to expire worthless. In other words, it's like you sell insurance policies to drivers that don't plan to drive. So you sell the insurance policies, you collect the premium, and you wait until the expiration date. And there was no risk or little risk because you were not counting on the driver to drive. You were not counting on the market to reach those places in the chart. So therefore, you would collect the premium and wait until the expiration date. Okay, and this is, you know, hopefully you are following what I'm saying. I know I'm saying this quite quickly. As I told you, this is a little bit of a crash course today if you don't know how options work. So bear with me. I'm going to do, I think we'll have one or two applications of this. So hopefully it will sync, it will click as we spend a little bit of time together. But really, we'll get deeper into that in the future when we do sharpening sessions, okay? In any case, let me do it. And let me add a little more information as well. So as I do it, everything makes sense to you and you follow the process. And if you have traded options before, I'm repeating myself now, if you have traded options before, you'll be able to take advantage of these opportunities in 8 minutes because the market will open in 8 minutes, okay? So, guys, let me pause, let me rewind and start again. What are we gonna do? Sell options. Which ones? This is in the chart. Likely to go. Why? Because those options are likely to expire worthless. And we want to sell the options, collect the premium, and let the options expire. So we keep the premium, like an insurance company. So how are we going to assess those places in the chart? Where the UFOs are going to be our tool. Think about it. Here you got a red UFO, another red UFO, another red UFO, right? So if I ask you the question, how likely, okay, how likely is it for this market to reach this place on this chart anytime soon? So what would you do? What would you say? You'll probably say it's not likely it's going to reach that place in the chart. Whereas first of all, that place is far away, so it's going to take time to get there. Second, if this market tries to go up, it's going to hit that red UFO and therefore fall down. If this red UFO fails and market goes higher, it's going to hit the next red UFO and therefore fall down. If the second UFO fails, which is very unlikely, but it happens, it's going to reach the third red UFO. So it would take a crazy move and many UFOs to fail in a row for the market to reach the upper part on this chart. And I guess we all agree this is unlikely to happen. It's not impossible. Okay, so this could be a good place. I'm not saying we're going to do it there, but in this initial explanation, this could be a good place for you to sell options and wait for them to expire, because price is not likely to get there anytime soon. And therefore, if you were to sell options above 150, probably those 150 options will expire worthless in the future. And therefore, if you sell them today, you get premium now, and in the future, they have expired. The market never got there. So you keep the premium and you made a profit just because time passed from today until the expiration date. Okay, that's the concept. But there is one more thing. Okay, and again, this is a crash course if you have never traded options before. Okay, there is one more thing. You need to know as well that options, just like insurance policies, have times where options are very underpriced. Okay, another way to say that is very cheap, or very overpriced. Another way to say that is very expensive. Think about an insurance policy, same story. Let's say that you want Hey everybody, I had a problem with the connection, but I'm back. Could you please confirm that you are with me and you hear my voice? It would be great if you could have a quick yes on the chat box. I believe it should be fine now. Perfect. That's perfect. Thank you for that, guys. Well, sorry, guys, but let's keep going. Okay, we have multiple things to do here, so let's keep going. Thanks again, and thanks for your birthday wishes, by the way, guys. You guys are so nice to me. So anyway, what I was saying is that options also can be in two different stages. Sometimes options will be very overpriced. Sometimes options will be very underpriced. And I was saying that it's home insurance in Florida. And I'm picking Florida because it's a place where sometimes there may be a risk of hurricanes. And let's say there have not been hurricanes for a very long time. So what would happen? Well, probably the cost of that insurance would be quite affordable because there is no perception of risk. Well, what if you didn't have home insurance and suddenly on TV, the weatherman are predicting a crazy hurricane coming in, and now you go meet with an insurance company to buy home insurance? Well, probably they will not even sell it to you, but if they were to sell you the insurance policy, they're going to charge you crazy. Even though the value of your house has not changed, even though the value of the option may be more, the value of the insurance policy may be more, because there is more perception for risk. There is a greater perception for whatever is going to happen, right? So think about a stock before earnings, okay? There may be a huge perception that something crazy is going to happen, and therefore what happens? Options are now overpriced, right? Or very overpriced, crazy overpriced. And you know what? That's when you have a great advantage for you to sell them. Because when you sell options, people think something crazy is going to happen, and the UFOs tells you nothing crazy is going to happen. Because for something crazy to happen, you will need no UFOs, isn't it? If you had a chart with no green UFOs or no red UFOs, that's where that market is likely to move a lot. Where if you had a chart with many UFOs, either green or red or both, react to the UFOs and therefore move less. Okay, so now not everybody knows about UFOs, isn't it? So sometimes the market will produce situations, and we want to take advantage of that. Some where options are trading at prices that are absolutely not reasonable, crazy high prices, and that's when you want to sell them to make money non-directionally. Okay, sell options in places where the market is not likely to go, where options are trading at prices that are really unreasonable, very high. So let's sell those crazily expensive options to people that have perceptions that suggest that something crazy is going to happen, where the UFOs tells us that nothing too crazy is likely to happen, but options are priced in that way. Okay? That would be the idea behind the scenes. Okay, so how am I going to do all of this? Well, I'm going to use the scanner. Okay, so here, second window on the left. Okay, guys, would you mind to confirm that you hear me and you see my? It seems that one of you is having a problem, but on my side, I see everything is correct at this moment in time. So if you could just give me a quick yes on the chat box, so for me to know that is all good. It seems that all is good now. Perfect. So how am I going to do this type of filtering in the market? I mean, the US market got 9,000, close to 9,000 stocks. I don't want to do all that filtering manually. Look for UFOs manually for all those stocks. Look for options for all those stocks manually. Look at overpricing for the options for those stocks manually. I don't want to do all of that. So how am I going to do it? I'm going to use the scanner. Okay. So take a look at the scanner I have. Thank you for those confirmation, guys. I'm going to click on the format button, and you're going to be able to see now a few things that are going to be very useful. Okay. Now, the font may be a little small here, so I'm going to try to zoom in. I'm not sure if this is going to work. If I zoom in like that, I think it's working. Yeah. So here is the setup I have in my scan with TradeStation. Okay, and notice that there is one box that is unchecked. Okay, so a shot or afterwards, you may want at this video again, which is going to be recorded and posted on YouTube, and you can then take the screenshot, anything you say. But take a look at what we have here. First of all, I'm looking at stocks where the closing price of the stocks is more than $50. So greater than or equal to 50. And the reason why is because I'm going to be trading options on those stocks, and I want those stocks to be of a certain price, because if the stocks are so cheap, then the options will be cheap as well, right? So I want the stocks to be of at least $50. So at least I got, some premium in those options, okay? Because apart from having the options very overpriced, I also want to make sure that the stock has some value, so the option has some value. So I'm going to draw the line at $50 per share, and in your case, of course, you can use different values, but this is where I'm going to start, okay? Next one is the volume average that you can see. Is I'm looking at the 3 months average, and I'm looking at least 500,000 shares per day as an average during the last 3 months. Okay, and again, a little less could be okay, a little more could be okay, but this is going to be my starting point, because if a stock has less than this liquidity, if a stock trades less than 500,000 shares per day, probably the options are not going to be too liquid. Okay, 500,000 shares per day does not guarantee liquidity enough in the world of options, but at least, okay, it's a good filtering process to get rid of many stocks that are not even worth it to check. Okay, so we're going to do that. Then the third row is, notice, is unchecked. We'll use that at a different time. So for now, ignore it. It's a couple of moving averages, but please ignore it for now because it's unchecked. The next one is the the open interest for all options. Notice that that one is checked, and I have a condition which is at least 100,000 contracts of open interest at the moment. Again, this is just to make sure the options got some liquidity. Okay, even though that does not guarantee options are going to be liquid enough, then there will be a little bit of a manual check that we'll do later on, but this is going to help for some liquidity filtering. And finally, the two last conditions are going to be the two ones that we're going to use to find very overpriced options and look at markets that are looking like they're not going to do much. Okay, so take a look. Implied volatility stocks, it's a standard indicator that is a built-in trade station. I'm going to show you that on the chart in a minute. And notice that I have selected as an operator that I want trade station to return to me the top 25 stocks that have the greatest level of implied volatility stock, out there. So out of all the stocks that meet my criteria above, I want to look only at 25 stocks, which are the stocks with the greatest implied volatility. In other words, the greatest amount of expectation built in the options, meaning that people believe something crazy is going to happen. And I want to find the stocks, the 25 stocks, where people have the greatest expectation for something crazy to happen in the market. Okay, and that will lead to very overpriced options. But also, I am looking at markets with a DMI. We'll talk about DMI maybe another day. It's another indicator built in trade station that comes by default. And guys, indicator is just like looking at the dashboard when you drive your car. Okay, it's just looking at the dashboard when you drive your car. If you drive your car and you are driving 60 miles an hour or 100. Well, if you're an experienced driver, you don't even need to look at the dashboard to know that's your speed. Okay, but at the same time, what the dashboard tells you is what's your speed. So this is not going to be a tool making decision. This is just going to be a tool that represents or tells you more about the overall condition in the marketplace, which is what you have in front of you as you plan. This is not going to be tools that tell you what to do, but those are going to be tools that will help us to filter. So we end up, with vehicles, that are moving at a certain speed only, right? So that's what this is. This is kind of like a speedometer. DMI is a tool that measures the strength of a trend, and we could talk more about that but basically what this tool is doing is measuring if a trend is strong or not. And the theory behind it suggests that if the reading, the ADX reading for DMI, it's 25 or more, it means it's a strong trend. And if it's below 25, it means it's not trending or the trend is weak, right? So basically, by scanning the market this way, I'm going to click run now. By scanning the market this way, now it's going to take a few minutes to perform the scan. What's going to happen is that I will end up with stocks with a decent level of liquidity that are in a pretty weak trending condition, meaning those stocks are not necessarily going anywhere intensively. And remember, where the stock is not likely to go. So I am scanning for stocks that are not going anywhere intensely. That's what DMI less than 25 means. And then on top of that, I'm looking at those stocks with those conditions that have options with a lot of expectation built in. I'm actually looking at the 25 stocks in the market with the greatest expectation built in. Okay? So I'm trying to look for contradictions, right? That's what I'm looking for. Contradiction equal opportunity. Contradiction where not much is likely to happen, and we'll double check with the UFOs, but people believe a lot of things are going to happen, and therefore options are crazy expensive. So what are we going to do? We're going to sell those crazy expensive options to those guys. Okay, that's the plan. That's what I'm thinking, and that's the rationale behind the scanner, the way I just described it for you. Okay, guys. So I'm just gonna wait a few more minutes. Okay, it's now doing the third pass here. We got 2 more passes to go, and we'll have the list of stocks that meet those conditions. Hopefully, we have a few. We'll have up to 25, as you know, because we selected the top 25. It doesn't mean we'll have 25. We may have 5. We may have 3. We may have 1. We may have none. We may have 10. Okay, there may be days in the market where you may not find this juicy contradiction. Okay, contradiction means opportunity, but sometimes you'll find it, sometimes you won't. Sometimes you'll find many, sometimes you'll find few. Okay, so that's why we use scanners and technology with TradeStation, to be able to save time, and also very importantly, the beauty of applying a filtering process like this. I mean, you guys know me. We have, especially some of you, we have done a few sessions together already, right? Since a few months ago. So, what do you think I'm thinking when I use the scanner? Apart from saving time, which is a direct benefit of using a scanner, what would you think I think of the scanner? Why do I like the scanner? What is the other benefit the scanner is giving you as a trader that is absolutely imperative and critical for you to be successful in trading? What would you guys say? It's very important for me, and the reason why we use a scanner. To propose or share thoughts. I would love to see your thoughts, to see we're on the same page. I'm just going to give you a few seconds, guys, as well, because some of you are watching this on Facebook, some of you are watching this on YouTube, some of you are watching it on iZone, and depending on the platform you use, sometimes there is a little delay, could be 10, 15 seconds. So I'm just going to give a few more seconds of time while the scanner completes, and also I get your answers. Thank you, guys. Exactly. Look at that. John Clark, totally mechanical. Okay, Bart, no problem. Now, my question was, what is the other advantage of using a scanner like this, apart from saving time, right? And is that it makes you mechanical. It's not like you're gonna end up picking stocks because you happen to like the stock, or you kind of like the stock, or maybe you like the sector, or maybe you know the stock, or maybe you know the product, or maybe someone told you about that stock, or someone told you about, there is none of this, right? So you have a process. Here we go. So love what you said. Mechanical process, consistent action, consistent result. Okay, this is the mindset of a professional trader. Okay, so this is the way to go, guys. And look at that. We just got the scanning process complete. Okay, we just got the scanning process just complete, and we ended up with 7 opportunities, 7 stocks. Okay, so we have Abbott. So let me load Abbott. Okay, take a look at that one, and let me just so you understand the process that just happened here. I'm gonna turn off the UFOs. I want to turn on the DMI in case you have not seen that before. It's a pretty ugly indicator, to be honest, but basically what this tells you is that if that stock, I'm gonna put this line at 25, right? So if that stock has the blue line. So everybody, which is the blue line. Let me make it 25. So I have my horizontal dotted line at 25, right? But I want you to watch the bottom blue line. That's the one. I would like you to check. Let me make it a little thicker, so everybody's focused on what matters. Okay, that blue line. Okay, the one that is currently trading at 15.4. Well, whenever that blue line is below 25, okay, which started here, right? So take a look at that stock. What is that stock doing? It's doing nothing. It's going sideways. Is that making sense? Where before that, it was above 25. And what was the stock doing? It was trending. Okay, right? So remember, to do non-directional trading, we are looking for stocks that are not likely to go to places on the chart, places that go to UFOs. I'm going to do it now. But to filter, I was using the DMI and looking at parameters below 25, just to make sure I'm looking at stocks where not much is likely to happen. Is that making sense? Or not much has been happening, and that's the current market condition for that market, okay? Now, what else? I was looking at the options, and if I look at the options, I am now activating implied volatile stocks. Well, take a look. When this line is all the way up here, so what does that mean? Well, it means, there is a lot of expectation, right? So, I mean, it's quite interesting. The stock is doing nothing, but there is a lot of expectation, and therefore options are very, very overpriced, okay? So, I mean, I don't need to show you this tool because we already filtered for it, but I'm showing it to you so you understand the rationale of what I have done, okay? Now, if I and this is the most important part, if I activate the UFOs, so what is this telling you? Well, this is telling you that, you got on-field orders to sell, so probably that market is not likely to go about 71 anytime soon, but you also have on-field orders to buy. Actually, you got 3 piles of on-field orders to buy right below, or that market is not likely to go below 63 anytime soon either. You guys, everybody see that? Okay, so notice that this thing has been trading range bound, looks like it's likely to continue trading range bound, but on top of that, it seems that options are very overpriced. Okay, so the only thing I'm going to have to be careful with TradeStation, that measurement of overpricing of options is calculated at the end of the day. And because it's calculated at the end of the day, that is yesterday, and today is a new day, their level of being overpriced or being underpriced, and therefore, you may not get the juicy premium, you may not get the very hefty premium that we love, but again, it's a good beginning to filter this way, and then we're going to do something a little more manual to make sure the trade makes sense and then execute. Now, before I get deeper into planning the trade with Abbott, and we can do the same with Caterpillar, also with ConocoPhillips, with Microsoft. We can also do the same with Norfolk Southern, Texas Instruments, and Visa. We got 7 opportunities in front of us, potential opportunities in front of us. An extra important step, which is to understand why is it overpriced. So what I'm going to do here is to look at briefing.com, click on search, and I'm going to type Abbott, which is the first stock I was checking. And basically what I want to check is that I don't have an earnings report happening, anytime soon. Because if let's say tomorrow there is an earnings report, well, now you know why the options are so overpriced. And actually something crazy may happen, because in front of an earnings report, the institutions that have on-field orders may choose to cancel the on-field orders. And therefore, the UFOs we have on the screen may not work as well as normal because of the earnings report. And therefore, I want to make sure that's not the case. Notice that with Abbott, the earnings reports is happening on the 23. So if I look at my calendar here, the 23, it's like 2 weeks and a half from now. So if I could plan a trade using options that expire on the 11 or the 18, because options expire on Fridays, if I was able to plan a trade with expiration dates on the 11 or the 18, basically I would not have the earnings risk because my options would expire before the earnings date, which is January 23. Okay, so I need to keep that in mind. Okay, so let's go ahead, and now that we know that we have 2 weeks of time, okay, let me be a little more visual. So I'm going to load OptionStation Pro. Okay, I'm going to load OptionStation Pro. Here we go. I'm going to load Abbott. Abbott is loading. I have all the expiration dates here, okay, and out of all the expiration dates, okay, I'm gonna, I'm gonna stay 1, 2, 3. I'm gonna stay, between those initial 4 expiration dates. I'm not gonna use January 25 because the earnings report is on the 23, so I will ignore that. January 18, okay, or it would be ideal, okay, even though I don't know if that will be possible. Okay, so I'm gonna do, and I have many strikes here. Let me maybe reduce the amount of strikes just to not to have too many things on my screen. Okay, so that's what we got. I'm gonna come back to this screen in just a minute, and chain, I'm gonna have to find a solution as well for the size of the font because it may look very small on your screen, guys. So maybe it would be useful as well that you open your TradeStation while I'm using mine, and you kind of load the same information on the screen that I'm using myself. Okay. So what do we have here? Well, let's begin with the 60-minute time frame. Okay, I'm gonna use 2 time frames to plan on my non-directional trade. I'm going to look at the 60-minute time frame, and I'm going to look at the daily time frame. And the reason why I'm going to do that is because for where price is not likely to go. So if I have many red UFOs in the 60-minute time frame, okay, maybe I don't even need to look at the daily time frame because price is not likely to go above all those unfilled orders anytime soon. If I don't have many of the UFOs in the 60-minute time frame, then I will look at the daily. And then I'm going to merge the information from both. Okay, so I want to look at 2. You could certainly look at more time frames, but really it's not that needed because the beauty of non-directional trading is that we don't need to be that perfectionist or that precise either because remember, we are not betting on where we are betting on where the stock is not going and sell options there, right? So we don't need to be as precise as in a normal trade, okay, in a directional trade. So here it seems to me have multiple price levels that are quite relevant. Okay, so obviously we got a red UFO here. If price comes here, is likely to bounce down. That's great to see. That's great to know. But at the same time, remember, you want to give yourself time until January 11 or January 18. I'm pretty sure that given the fact that this chart is a 60-minute chart where every candle is 1 hour, you could certainly reach this 69.66 level, quite quickly. Even if you get a bounce and it gets to the red UFO and falls, then maybe next 2 days it comes back up, and next 2 days you reach the blue line. That what I'm trying to say is that UFO is very close. Okay, so what I'm going to do first is to be a little perfectionist and move to where the furthest UFO in the 60-minute time frame is. What I would like to do now is I would like to measure the distance from the current price to that line, okay, which is $7.44, okay, $7.44. And what I would like to do is to project those $7.44 below the current price, which is 67.22. I would make this to be 59.78. Okay, 59.78. In other words, if I shrink this thing and I look at red UFOs and green UFOs of an equal distance, okay, of an equal distance, it looks like if I draw my line down there, okay, let me turn off the UFOs for a second just to be a little clearer. It looks like from current price, which is here, to the upper blue line, bottom blue line, I have the same distance, kind of the same distance. And this is calculated mathematically, but this is also calculated, in a very convenient location based on UFOs are, right? Now another, and I did that by starting with the red UFOs. Now, what if I do the same with the green UFOs? Well, if I do the same with the green UFOs, I have a collection of green UFOs here. Okay, this is located at 62.51. So let me make the initial 2 lines my thinking. I'm gonna make them purple and purple. Okay. And again, I'm fully aware that today I'm moving quite quickly through the content of today's session. Okay. Again, we'll get organized for the sharpening session, so we speak more and more the same language. Okay. So now, if I measure the distance from the current price to this line, which is below this collection of UFOs, so we are talking about. Sorry, I need to click and hold. Talking about a movement net change of $4.71. So $4.71, if I add this, $4.71, 4.71, here we go, now I got it. So if I add 4.71 to the current price, which is 67.16, I don't need to be that precise to do that, it's 71.87. So 71.87. So this is bringing my price up to here, which another way to say that is that, you know, the next UFO a little bit beyond that is that one. So if I was to time, now you can see what just happened. So right here with the yellow circle, I am pointing at the current price. Well, remember, I'm looking for a range-bound market. So it looks like for some time, I got UFOs above and UFOs below, and one potential trade I could take is a bet where I am expecting this market to remain between the two light blue lines. Another bet that I could do is, which is a little bit more generous bet, probably a little bit of a higher probability, but also, you know, probably we are not the only person thinking about it, and therefore the trade may not be as good. The other bet that we could have is that we expect now that for some time, the market is not going to remain only between the two light blue lines, but actually it's going to remain between the purple lines. So in other words, now you are looking for a wider range for price to remain between that range for a certain period of time, okay, up to January 11 or January 18, before the earnings report on January 23. That could be another way to think about it. Okay, and of course, that would be a higher probability trade, but then probably you're going to get paid less. Okay, so now, once you have identified your range, what you will want to do now is to, of course, turn on your UFOs one more time. Okay, and then move to the daily time frame to see if the daily time frame adds some information to where those lines ended up with. Okay, and notice how my blue line not only is above the 60-minute UFO, but it's also above the daily UFO, right? So I could say that price is very unlikely to reach 74.57 anytime soon, but I could certainly say that price is not too likely either to reach 72.38 anytime soon. So this 72.38 doesn't seem like a crazy place where to sell options, because it's less likely we'll reach 74.57, but for it to reach 72.38, it needs to break 2 UFOs in the 60-minute time frame and 1 UFO in the daily time frame. So, you know, it's a lot of room for price to move, right? And a lot of on-field orders to get filled. So it doesn't seem to be a crazy place. And then on the bottom side, same thing. It's very unlikely for price to get to 59.96, because it will need to break many green UFOs from the 60-minute time frame, but also 1, 2, 3, and 4 of the UFOs in the daily time frame. So the purple range, very, very high probability, okay? But the light blue range doesn't look bad to me either. Why? Because you have multiple green UFOs in the daily time frame and multiple green UFOs in the 60-minute time frame. So again, both ranges seems to be reasonable. So which one are we going to take? Which one is going to be the most intelligent or logical or fair bet? Well, probably will have to do a lot with with the premiums. Take a look. Take a look. Let me see. I have a question here from Milan. I have been only trading futures and do not know anything about options. Can you recommend a good play to start? Yeah, we'll do it together. We'll do it together, Milan. Just bear with me, and we'll do it together. As I said before, if you have never traded options before, probably borderline with overwhelming. Okay, but just bear with me, because that way when we get into proper explanations with no rush, so you get to understand options better. You will have seen it before already. Okay, so you'll be fine. Thanks for that, Milan. So now back to the chart and back to the option chain. So what do we have? If I look at let's begin with the lines below. I got 62.5 and I got 59.86. Okay, in other words, 62.5 and 60. If I look at my options, okay, and I look at the one that expire in January 11, the 60 pays me nothing. In other words, I'm not the only guy in the planet thinking about what I just shared with you. In other words, there is no opportunity. What about a 62.5? Well, that one is better. Pays me 6. But still, it's very little. Okay, and by the way, if you never traded options before, always need to be multiplied times 100. So it's $6 per contract. Obviously, you will need to sell crazy amount of contracts to make any decent profit. It pays too little because the trade is too high probability and no one. Okay, so that's why we don't have a trade January 18. So if I look at the 60, I get paid 11. Okay, that probably not enough. What about 62.5? Now I get paid 26. Okay, I get paid 26. It's not like it's a lot. It's a little more, 26. And what about the higher part? If I go for 62.5, is the light blue color. So then I'm going to have to go for the 72.5, which is also the light blue color. So 72.5 call pays me 7, and put pays me 26. So I am being paid too little. Unfortunately, I'm going to have to say that Abbott is not providing a trade for us. It is very, very likely, the reason for this is very likely what I said before, which is that TradeStation update the options prices for the scanner, okay, for the scanner with the tools that this scanner with the implied volatility stocks here, TradeStation of the day values, and it seems that yesterday at the end of the day options were more inflated, but notice that today, since the market opened, the market went up by 2%, and therefore people are more now in a calm mode, and therefore people are less willing to pay for the options, and therefore options became less overpriced, or maybe now options are simply fairly priced and there is no overpricing for Abbott. Okay, so what are we going to do? Well, we're going to switch to the next stock. If Abbott is not good, what about Caterpillar? So I'm going to load Caterpillar. Okay, it seems that it's taking a little bit. So what do we have here? Well, if you look at the Caterpillar, this thing is in the red UFO as we speak, so this market is likely to fall. I'm a little concerned because there is nothing to stop this thing falls on the 60-minute time frame. Oh yes, on the 60-minute frame we got a bunch of UFOs. Okay, so there is something there to defend ourselves. So what about this collection of UFOs and bet on price not going above 143? So let's do the same. From current price to 143, we are talking about net change $17. So what if I use the current price 125 and I project 108? So 108 108, it's all the way down here. Okay, that's where it is. And I don't see any UFO in this time frame, which implies that I'm going to have to load more candles because this thing went down very much. So I'm going to load 1,000 more candles and see what happens. Okay, still have no UFOs, so I'm going to have to look at the daily. And that's what we have. So we have a collection of UFOs here. And because those UFOs are basically overlapping each other, if I was to draw the line somewhere, I would propose to draw the line here. Okay, so before I spend any more time doing any extra assessment, it seems that the price where this market is not going to go is 103.32. So let's look at, as we did before, let's look at Caterpillar earnings reports, CAT. So let's see what the date Caterpillar. So I know which expiration date I am allowed to use. Okay, for whatever reason, it's taking a while. Okay, now, so earnings reports will be on the 28th. So 28th of January, that's when the earnings report. Looking at Caterpillar, I'm going to have to be very careful here. And January 25 is the maximum expiration date I will want to use. So if I use 103 as an expiration, as a strike, how much am I going to get paid? Well, it seems I'm going to get paid very, very little as well. Okay, so what happened? Well, yes, look at that. Caterpillar is up by 3% today. So trading, guys. So these things happen. But unfortunately, today, the market is going up quite intensively, and certain stocks, unfortunately, it happened to Abbott and Caterpillar, are going up very strongly, and therefore, naturally, the price of the options are becoming much, much cheaper than what the scanner expected, and therefore, this trade. So I'm going to move into COP and see what happens. Okay, and COP, by the way, is also up by 2%. So I may have a similar scenario. What if I look at Microsoft? Let me see if I see something that stayed a little quieter, and therefore market participants in that stock are less relaxed. 2.94% for Microsoft. Yeah, it's a very strong day. 3% for NSC, Texas Instrument. And sometimes as a trader, you'll have to say have no trade. Texas Instruments 1.76. And what about Visa? Visa 2.70. So almost all stocks have been doing the same thing, which makes sense because the S&P is going up in this way. So anyway, so let's do this. So if I do the same approach I had before, 60-minute time frame, I'll try to do this quickly because we were supposed to be together for an hour and I surpassed that already. Not that I mind, but may have things to do, so I want to be respectful of that. So what if you were to bet that price is not going to come here anytime soon? If you were to plan for price to not reach anytime soon, 140 minus 131.5, which is the current price, minus 131.5, which is the current price, that's $8.6 minus 131.5, that is 122.9. So 122.9 is more or less here. Okay, so interesting. So we are right in the middle between 140 and 122.9. So let's take a look at the premium for Visa and also check the earnings report for Visa. So loading Visa here, loading the Option Station Pro as well. So Visa has earnings on January 31st. Okay, so we need to keep this date in mind, January 31st. The option chain is loading here for Visa. So we don't want to exceed 31st, so we'll look at January 25. And if I was to look at the 122, well, that's a different story. Now we got $87 per contract for the 122, and for the 140, which is the one above, right? Yes, 140. The 140, we got 65. Okay, so we got 65 and 88. If we were to sell those options, okay, it's like at $150 per contract. Okay, if you sell 10 contracts, that's $1,500. You know, again, position size is a different story, and we'll need to talk about how many contracts to use per trade. We can certainly talk about that in another day. Okay, but let me put together a trade here very, very quickly, so you get the concept, and we will execute this better another day because we need to conclude the session. But at least you get to see the process. So what I'm going to do is change, instead of spread, I'm going to change this to Iron Condor, and I will have to explain what Iron Condor is if you never traded options before. Please, 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 don't be intimidated. Okay, I remember when I started myself learning how to trade years ago, or you know, or many traders met throughout my trading career. You know, the first impression many traders have when they see options, intimidating, right? So please don't be intimidated, because like everything in life, when you know what you're looking for, then no matter what you do is trouble. Does that make sense? So it's key that you look at this properly. Okay, so I'm gonna right click and analyze selling an Iron Condor. I will explain properly another day what is an Iron Condor and how it works. Okay, and basically what I'm gonna do here, you can see here you got the words puts and word calls. So the calls go above, the puts go below. Okay, again, for options traders, you know that. If you are not an options trader, we'll talk about it. But just for now, just think about someone gives you a call. If someone gives you a call, you would pick up the call. And if you pick up the call, what happened to your hand? Your hand went up, right? So the calls go up. And therefore, because we're looking at the 140, I'm going to do 140, 141. Again, for the traders that you haven't used options, this is advanced at the moment, but bear with me on this. Okay, so 140, 141. Okay, calls go above price. Why? Because you pick up the call, the hand goes up, so calls go above price. What do you do when you're done talking on the phone? You put the phone down. So what do you do with the puts? The put go below. The hand goes down when you. All we said is 122. So therefore, I'm gonna go for 121 and 122. All right. So I'm gonna sell. You can see a red color on the left. Sell the 140 and the 122. Okay. Sell the 140 and the 122. And the 141. That would be an Iron Condor. And we are not going to execute this trade because I need to give you specific instructions on how to do this, and we don't have the time to do it. But just to open up this conversation and go deeper into future sessions, okay? You know, as long as this market remains between this range set by the horizontal line and the two vertical lines, with the blue lines going down vertically, okay, that's kind of like the range. Okay, notice the range goes here all the way to kind of like 120 something and all the way to 140 something. So as long as the market remains between our UFOs, right, 122 something and 140, then those options will expire and you would collect a profit out of waiting until January 25. Okay, so this is making money on time passing. But again, unfortunately, we don't have all the amount of time needed to go all the way to the end of the plan of this trade, and we will conclude the session here in just a second, because you know that was my commitment at the beginning. When we started, we said we will spend an hour together. We spent an hour 15, so I want to respect your time. But again, we get organized little by little as we go. Today, spend a lot of time explaining the rationale behind the scanner. In the future, we spend a lot of time in the sharpening sessions to have you understand everything. So in the future, when we do get together sessions for longer term or short term, like today, we will not need to spend time explaining why we do things. We will just do those things. Is that making sense? And therefore, we'll be more efficient planning trades and executing trades. Okay, but today I had to give you a little bit of a crash course on options, so at least you follow what I'm doing, because I know some of you have not traded options before, and I want to be respectful of that. Okay. Anyway, guys, hopefully today was useful to you. Last day we left the session, and I was able to demonstrate a couple of trades. Today I demonstrated half a trade. So we'll do better another day, okay? But again, the markets will give you what they give you when they give it to you. We don't have the power to create opportunities. We have the power and the discipline, and we are professional in a way where we adapt to what the market gives us. Is that making sense, everyone? So today we did what we had to do, and next day will be another day. So, well, actually, Monday will be another day, because tomorrow is the weekend. Guys, you guys tell me, how did it go? Give me a little feedback before I leave you. How did it go? You can certainly give me a little, it went well, it didn't go well, a little feedback now in the chat box would be appreciated, so I know what you guys need. If you want to be more detailed, of course, you can always shoot an email to us. Let me remind you of our email while you guys type. It's reach@tradewithufos.com. Okay, reach@tradewithufos.com. Second, I will have it on the screen. So reach@tradewithufos.com, and you can always email us with anything you need. Okay, guys? Went well. Okay, thank you so much for your feedback, guys. Nice to see you all. Okay, nice to see you all, and keep up the good work, everybody. Okay, enjoy the remaining trading day ahead of us, and have a good weekend. I will see you next week. Actually, I will see you over the weekend on Sunday. So see you on Sunday at 10 a.m. and take a look at our website. I think tomorrow or so, the following hours for January 9, January 10 will be published. So we will update the website soon, and we'll keep going. Yeah, Yeah, very good point. Let me share that with the group as well, because this is key. Options is beyond me, but I understand the principle of using supply and demand for options, which is the key. Okay, which is the key. If you were to use options and you don't have the understanding of where the market is going or where the market is not likely to go, okay, I would just go ahead and say good luck, because no matter how much you know about options, what you need to do to profit is you need to be lucky. So what's the key? Well, the key is our beautiful UFOs. Okay, why? Because thanks to the UFOs, you know where the on-field orders are in the market, and therefore you know where the market is likely to turn or likely to stay, likely to move or likely to go or likely to not to go, and therefore you can plan on. John, I'm reading your message as well. You can plan on those directional trades if you like that better, or you could also plan on those non-directional trades. Or by the way, you can do both. In one account, you do the non-directional, and the other account, you do the directional. And now it's like you hedge yourself, right? Some of your trades make money on time passing, and some of your trades make money because you're catching moves and writing moves with precision. Okay, everybody, really a pleasure to be here. I could stay forever. I love this, but we all need to trade. So enjoy the remaining part of the day, and see you on Sunday. Take care, my friends.